Hi, I'm Lisa. Welcome back to my channel. Today, I want to start off with a clip from Stocks with Josh's channel from his live from yesterday. And then I'm going to talk a little bit about what I'm thinking going into August and September.
We've had 6 months the markets have gone up, right? It was the Magnificent Seven that was driving big tech up the entire time while a lot of the other stocks began to lag. The last 2 weeks, we began to see rotation. All of a sudden, big tech was slowing down and money was going into the Dow, which was sort of a surprise. And we were getting ready to go into some big earnings, and everybody was wondering what was happening. The other thing that I pointed out was that we were seeing rotation into healthcare. The question that I'm posing, that seems kind of obvious in a way, is that we've now entered into correction, and it's very likely that we're going to be in that correction mode for the next 2 months, so for August and September.
Okay, so I know you heard the term rotation. So that's when money is moving away from one area in the market to another, but will inevitably or likely return back to that sector. And then also correction. So this is considered to be when a major index such as the S&P 500 declines by more than 10%, but less than 20%. And historically, this is what occurs in the month of August and September. So here's just a quick look at the average monthly stock market returns from 1980 to 2018, for example. And you see there is a decline yearly in August-September timeframe. So I've shared them before on my channel. I admire all the core four. So as I was watching this part of the live and just thinking about my plans as we get really into August and September, the next 8 weeks, it made me think I wanted to share a little bit about my thought process now that I'm actually investing on my own, maintaining portfolios for myself, for my daughter. So, prior to about 4 years ago, the extent of my investing was contributing to my 401k. And, as my salary increased, my 401k contribution increased because it's based on your earnings. Or at the most, what I would do is maybe increase it 1% on my own, but that was it. But now that I am an investor, I am much more of an investor than a trader. I have to be mindful of these things, and I have to be prepared and make a plan and have cash on hand for times like this when I want to be mindful to be able to buy the dip. I hear people say that the market is not good right now. I'm scared. You got to realize what you're investing in and buy the dip. Be glad almost at times that you can get started in investing into a certain ETF or stock that you believe in, that you've done your research on, and take advantage of these times. I'm not going to be adding anything new right now to my portfolio. I mentioned, I think in my video yesterday, my Webull, I have 19 different positions there already. So definitely not looking to add anything else. I do want to go stronger into ETFs, exchange traded funds, which are a basket of stocks, which can give me, exposure to the S&P 500 without me having to invest individually into Home Depot and Lowe's or NVIDIA and Microsoft. If I keep on choosing like that, my portfolio is going to be a little bit overwhelming for my preference. We all wish we had the crystal ball so that we could know that we should go heavily into NVIDIA or even something like Tupperware, which recently had a crazy run up. But we don't. And I am trying to be grow my money and be on this path of building wealth, but in a conservative way. If anything I feel uncertain about, I'm going to keep it to a small percentage of my portfolio. But definitely my foundation, because of where I started building, is going to be Apple, as well as VTI and VOO. But I had at one point my portfolio was over 50% Apple, but it's done well for me. But I'll get into that more another day. And actually, I'm currently doing a challenge where I'm going to be concentrating on building a little bit more into Apple. So, as I said, now that I'm building the portfolios, I have to be more in tune with when the market is going to be down and be ready for it. And, it's not going to discourage me from investing. Uh, like I was at the beginning of the pandemic and, back in 2008 when I had my daughter. We were in like very hard recession times. And back a few years ago, as well as back in 2008, I also had that fear of I might get laid off or there could be some interruption with, uh, there. And, it didn't give me the mindset to be wanting to save money and invest and feel comfortable with that being a priority. I was just pretty much trying to get by. But thankfully, I did always contribute to my 401k. But, my mindset has changed in recent years. And yeah, just wanted to share this in my thought process as we go into, as I said, August and September. I'm going to be, realizing that there could be correction and I will be seeing red days. And what am I going to do? How am I going to take advantage of those red days? I plan on buying the dip if that's what occurs throughout August. And I don't know if it'll be more so in September, but we'll see. So leave me a comment. Let me know if you've been a long-time investor and we're already aware of this, or what your plans are in having your cash on hand for investing over the next 2 months. Are there any stocks that you're waiting to see them drop so that you can go hard and heavier than usual into investing during this time frame? Okay, so that's it for today. Thanks for watching. If you haven't already, please subscribe. Have a great rest of your weekend. Okay, bye.